This is your technical update from the LMAX Exchange Research and Analytics Desk for Tuesday, June 9th, 2015. Euro dollar. So the euro is locked in an important consolidation right now, and it's going to be important to see whether we break above recent highs that were set at 1467 going back to the 15th of May, or if the market could hold below that level and break back below recent support at the 108.20 area. A break above the 114.67 high would suggest that the market's putting in a more significant base and would open more corrective upside over the coming sessions, potentially taking this market back towards the 120 area. However, inability to take out 1467 or close above 1467 will keep the immediate pressure on the downside and this medium-term downtrend intact in favor of fresh weakness back towards that 108.20 area low. A break below 108.20 will confirm bearish continuation and expose a retest of that critical support in the form of the 2015 12-year low at 104.62 from back on the 13th of March. Sterling dollar. So cable has been locked within a consolidation off of and ahead of recent key support at 50.90, with the market content on holding above recent lows that we saw at 51.70 for now. At this point, the pressure does remain on the downside, though a break back above recent highs around the 154.40 area would take the immediate pressure off the downside and suggest that we could see a retest of those recent highs that we saw for 2015 set back on the 14th of May at 58.15. Dollar yen. So dollar yen remains locked within a very well-defined, intense uptrend, and the market has recently traded up to fresh multi-year highs at 125.85 ahead of this latest minor pullback. Despite the pullback, the structure remains intact, and we could still even see additional corrective declines to allow for more significant daily studies and weekly and monthly studies to unwind from overbought before the market looks to sort of set out on the next key upside extension. With that in mind, any setbacks, however, should be very well supported by this previous resistance now turned support at 122, which represents that breakout level from that multi-month consolidation that we'd seen for much of 2015. Euro Swiss. So Euro Swiss remains well supported on dips, and the market looks like it's in the process of recovering after recently breaking above key resistance at 105.25. Look for a push back above the recent highs that we saw last week at 105.75 to open the door for an acceleration and retest of the February peak at 108.15. At this point, setback should be well supported ahead of 104, while really at the end of the day, only back below 102.35 would take the pressure off the top side and negate the recovery outlook for this market. Aussie dollar. So Aussie remains locked within a more well-defined longer-term downtrend, and the market is now consolidating just off recent multi-year and yearly lows at 75.33 going back to the 2nd of April. At this point, any rally should be very well capped ahead of 80, with the market eventually seen below 75.33 and towards the 70 area further down. Ultimately, a break back above the recent high that we saw going back to the 14th of May at 81.63 would be required to force a shift in the structure and take the pressure off the downside. Dollar CAD. So although dollar CAD has recently stalled out after breaking up to as high as the 124.40 area, the market does retain a constructive outlook with a higher low now sought out above the more significant medium-term higher low that looks to be in place around 119.20 in favor of the next upside extension back towards and eventually above the 2015 high at 128.35. Look for any setbacks over the coming sessions to be well supported around the 122 area. Kiwi dollar. So Kiwi remains locked within a well-defined downtrend, with the market recently breaking below key support at 71.76, opening the next major downside extension towards the 65 area further down. At this point, any rallies in this market should be very well capped ahead of 73, while ultimately only a break back above 77.44, that high that we saw several days back in the end of April, would compromise the current downtrend. SPX 500. So the S&P 500 continues to show signs of topping off recent record highs that were set on the 19th of May at 21.37. The market is now closing in on key support, which comes in the form of the low that we saw on the 11th of March at 20.40, and a break below that level will help confirm the structure, the reversal of this structure, and accelerate declines. Gold. So gold is doing a good job holding above critical support at around 1170. This is some key internal support, and the market has been unable to close below that level, and the ability to hold above the level on a daily close basis keeps the recovery structure intact, the basing outlook intact, in favor of potentially a resumption of gains back towards key recent highs that we saw on the 18th of May at 1232. Ultimately, only a daily close below 1170 would shift the structure and put the pressure back on the downside, potentially exposing the 2014 base at 1131 further down.